let's talk a little PayPal. So, PayPal, very impressive numbers here. 14% total payment volume growth year over year. Net revenues up 9%. Transaction margin dollars, which has been kind of the one of the few bearish spots to point at for PayPal, was up 4% for the company year over year. Operating income was up 17% year over year for the company. Operating margin up 98 basis points to 15.2%. As far as their net income, that raised 12% year over year. And keep in mind, these are GAAP numbers. These are generally accepted accounting principles. You can't pull any tricks and say, well, take out this and take out this. No, this is GAAP basis. This is as true gets. EPS on a diluted basis up 18% for the company year over year. Net cash provided by operating activities up 64% year over year for the company. If you want to look at the non-GAAP basis, on an FX neutral basis, net revenues are up 10%. If you want to look at net income on a non-GAAP basis, 20% up year over year. EPS on a diluted basis, 27% up. Free cash flow up 76% year over year. Adjusted free cash flow up 86% year over year for the company. Absolutely phenomenal. Now, their guide came in sleepy, right? Guiding for 6.5% to 7% net revenue growth on an FX neutral basis. Here's the deal. They sandbagged this last quarter. They're probably sandbagging that one as well, right? Probably. That's just my guess in regards to this whole situation, right? Now, when we look a little deeper here, we're going to find that PayPal's balance sheet looks very good, very healthy. Total current assets, almost $64 billion versus, a little under $50 billion in total current liabilities. So we're about $14 billion in the plus there. And then if you look at total assets versus total liabilities, close to a $21 billion in the plus difference there. So PayPal's balance sheet looking healthy, wealthy, and stealthy. If we look at the income statement, it was a B grade income statement here. Revenues about $7.7 billion versus just over 7 in the same quarter last year. Transaction expense was one of the few, I thought, down spots. $3.9 billion versus about a little under 3.3 in the same quarter last year. Transaction and credit losses, they brought that down substantially year over year. You would think, if anything, for that would be up, right? Nope. Customer support and operations, very impressive. They brought that down. Sales and marketing brought that down. Technology and development, they spend a little bit. Alex Chris wants to spend some. G&A, they brought that down. And then they got a one-off expense there, right? So operating income, $1.16 billion versus a little under $1 billion the same quarter last year. Income before income taxes, $1.2 billion versus less than $1.1 billion same quarter last year. Net income, $888 million versus $795 million the same quarter last year. Diluted EPS, 83 cents versus 70 cents in the same quarter last year. Very impressive. Now, if you check this out here, this is extremely important. Extremely important. On a sequential basis, they just grew active accounts. It has been quite a while since PayPal grew on a sequential basis active accounts. And they grew them by about 2 million. Is it some crazy number? No. But the bottom line is, they grew active accounts on a quarter over quarter basis. That's huge, guys. It's been a long time since that has happened. So that means whatever Alex Chris is up to, which he's up to a lot, is starting, keyword is starting to work. Now, that leads me to the conference call. That's where I was a little shocked, just to be honest, okay? You guys got to listen to that first 15 to 20 minutes of the conference call. It was impossible, literally impossible, to not walk away impressed by that conference call. Here's the deal. Alex Chris, first off, sounded like the numbers sucked. I don't know other way to put it. He made it sound like this is I don't want to say disappointing, but like he laid it out like this is just a start. Like, this is no big deal. I'm looking and I'm like, this is pretty impressive, dude. Like, I like this net income we got here, especially when I own a stock here that has a forward P of 12 on it. It's not like there's some crazy high valuation name that has a forward P of 55. And I'm like, oh man, we got to come in with insane growth. They're growing bottom line at double-digit clips. They're growing EPS at double-digit clips. This is very impressive. I'm very impressed. The revenue looked great, 9% year over year. Total payment volume, TPV, up 14%. I'm looking at this saying, let's freaking go. And he's just like, just makes it sound like, no, this isn't even like, the gist of it was like, nah, this is nothing. Just wait. He views this as kind of like still down times. He calls it transition year. I'm looking, I'm like, dude, we're transitioning pretty freaking good. He keeps calling it transition year. He's like, this is early innings type stuff. We have so much work ahead. for where we're going and what we're doing. And he laid out the whole roadmap. And I'm just listening to him go point after point after point on what they're up to. And I'm like, dude, this is freaking awesome. Like, I love it. I love it. Don't be satisfied. Don't be satisfied. I love it. And so, like, I challenge you guys, listen to the first 15, 20 minutes of that conference call, right? Do it over the next week or two. Do it on 1000xstocks.com if you want. And you'll be pretty amazed at what you hear. Now, my Mag 6. So 4 of my companies I've reported. How am I feeling about these companies? My Mag 6, these are companies that are 6 figures or more in the public count, right? Meta, I walked away from their earnings more bullish on Meta than I went in. Tesla, I walked away from Tesla's earnings the same. Probably about the same, roughly. I don't think I'm more bullish or less bullish on Tesla. Pretty much everything, I already know everything that was going to happen, okay? PayPal, as far as what the business is doing in the future, right? PayPal, I walked away from that one more bullish than I went in. Amazon, walked away from that one more bullish than I went in. Elf and Palantir still are to come. I'll be live streaming Palantir's earnings on Monday, okay, on Twitch. So overall, I'm pretty pleased overall. Now, the important thing I got to explain to you guys is only the strong survive. This is, we are going through still an inflationary environment, right? The consumer's been hit bad. We've basically, I think we're kind of like in a borderline recessionary time, and we've kind of been flirting with this time for quite some time, right? And you're seeing a lot of companies' earnings where a lot of these big companies are just reporting very disappointing numbers. You look at a Southwest Airlines, how bad their numbers were, right? Caterpillar numbers were not even impressive to me. I was like, how's that company? That company should be like beautiful right now. And Caterpillar was even disappointing. You look at a lot of these big dog companies. There was others that reported last week that I went through their income statements. I'm like, this is just not impressive for a lot of these big companies that are significant, right? And so only the strong survive. And, we've been able to have so many people in the private group over time have such success in there. And this is because I teach everybody in those course curriculums exactly how to identify failures, successes. And you look at my companies and you're like, how are my companies reporting such phenomenal numbers, right? How are those business models getting in such a stronger place? You look at my companies, just look at the companies I reported, just in the past few days. Look at Meta's results. Absolutely phenomenal. You can't say anything bad about those. Look at Amazon. Look at SoFi. Look at these companies. Look at my stocks. Look at PayPal. Like, these are the companies that are freaking doing it well. Their fundamentals are increasing dramatically, their revenues, their bottom lines, everything you look at with these businesses. And it's like, how do I do that? I know what I'm fucking doing. Oh shit. I don't mean to cuss, man. I know what I'm doing. And then you look at these other companies that are reporting such disappointing numbers. And you're like, it's because people are finding stocks that they don't really even know what they're doing. They don't know how to grade income statements. They don't know how to grade balance sheets, cash flows. They don't know how to figure out if they're getting ripped off on a stock or they're getting a great deal on a stock. And ultimately, in the end, they're buying into companies that have business models that are failing, revenues that are going down, earnings per share that are going down, net incomes that are going down for these companies, right? And then you look at my companies and it's like revenues going up, margins going up, profitability going up, earnings per share going up, net income's going up, right? So, all I'm saying is probably apply to join my private group, pin comment down there. You're going to get way more from it than I'll get from it. There's no question about that. And a lot of people, want to put off oh, I don't need to be in Jeremy's group. I know stuff. And then they find their business models are failing. And they're like, damn, I wish I freaking knew what I was doing. So looking at PayPal's raw numbers here, okay? First off, total payment volume up 14%. That's on an FX neutral basis. So that's the most perfect number you can kind of get. Up 14% year over year. We will take that. That's a very good total payment volume number there. On a GAAP basis, net revenues were up 9% for the company. Transaction margin dollars up 4% for the company. Operating, which has been kind of one of the very weak spots that if you were bearish on the stock, you kind of point at, but that seems to be getting in a better place. Operating income up 17% year over year for the company. Operating margin up 98 basis points. Net income up 12%. And this is all on a GAAP basis, a generally accepted accounting principles. So this is, you can't fool with stuff when you're on a GAAP basis, right? EPS up 18%. So you might say, okay, if their net income's up 12%, how's their EPS up 18%, right? Share buybacks. Net cash provided by operating activities up a whopping 64% year over year. On a non-GAAP basis, net revenues up 9%, 10% on an FX neutral basis. Transaction margin dollars 4%, operating income up 15%, operating margin up 84 basis points, net income up 20%, earnings per share up 27%, free cash flow up 76% year over year, and adjusted free cash flow up a whopping 86% year over year. As far as the guide went, they got it for, we can call it 6 to 7% revenue growth next quarter. And it seems like they keep taking these kind of conservative numbers so then they come in and beat them, which is once again a smart thing. EPS 83 cents compared to 92 cents prior year, but keep in mind the prior year had a 9-cent benefit there. And once again, I think they're taking a conservative stance there. Okay. Now, the most exciting thing I thought was listen to the first 10 minutes of the PayPal conference call. You can do that on 1000xstocks.com, by the way. Listen to that first 10 minutes of the conference call, right? It's amazing. And the reason it's amazing is you listen to Alex Chris talk, okay? And he talks like, this is just like early, like we got so much more work to do, like not impressed by these numbers at all. Like literally you would think their revenues were going down and their profitability was going down or something, the way that man was talking. And so his aspirations for where he's taken PayPal is so far beyond where this company's at today. It's incredible. And also you listen to all the ways he's planning on improving PayPal and Venmo and making the product stickier. Oh my gosh. And so, and I'll go much more in depth on PayPal tonight when I got some more time on my hands after the Amazon earnings and all that. And we'll talk more in depth about everything on the main channel. But I got to tell you guys, I walked away from this earnings way more bullish than I already was on PayPal. Given the numbers and given that first 10 to 15 minutes of that conference call and hearing Alex Chris talk about his views on the business and where he thinks he can take things, oh my gosh, absolutely extraordinary. So I am extremely, extremely excited about the long term for PayPal. And honestly, these short-term numbers are still pretty dang impressive. I know Alex Chris might not be impressed by them, but net income up 12% year over year, EPS up 18%, net cash provided by operating activity up 64%. These are all on a GAAP basis. Total payment volume up 14%. To me, that's impressive. Especially for a stock that's at a forward P of 12. And so when I hear a man that's not impressed by these numbers and he's got way bigger aspirations, oh man, I'm excited. We're going into wartime on the stock market, folks. Wartime. Now, what type of companies do you need to be invested in and need to be buying in this sort of market? Because keep in mind, for the last really 18 months, we've kind of been in a peacetime market. And in a wartime market, different companies kind of cut the mustard for that particular time period, okay? And especially when you take into account, no one knows what the Fed's up to. No one knows when the Fed's going to start cutting, when they're going to cut. It's impossible to predict. We've been trying to predict that for a year plus, and no one's accurate in that. And so, that's out there. We don't really know where the direction of the Federal Reserve is, right? Now, you've got to be finding profitable companies in this sort of environment, right? This is where the main emphasis should be put in terms of buying of assets in this sort of market. Profitable companies that have strong earnings per share, net income. There's no all of a sudden they start losing money or something like that. Not in this sort of market. Not when you're going into a wartime market. Second thing is, balance sheet is so important. The Fed, there's a lot of hopes going in this year. The Fed would start lowering interest rates, which would help companies out. We don't know about that now at this point in time, guys. No, if we have a situation where the Fed waits to lower rates too long and we get into a recession, some companies that are making profits right now could actually start taking losses, which could hurt their balance sheet even more significantly because they might have to take out more debt, right? If they could even get access to that debt. Also, it's harder to raise capital from your shareholder base if you're going into a recessionary environment. So you've got to stick with companies that have good balance sheets, companies that are earning a lot of interest income right now because they should be, and companies that are not cost themselves a fortune in terms of interest expense. Because if you're buying a company that has huge interest expense because they're loaded up on debt and they don't have much cash, well, you got to prepare for a Fed that might be up here at these 5.5% rates for another 3, 6, 9, 12 months. And so that continues to weigh on that company, right? And then if the Fed does start lowering, it's probably because the economy is getting worse, which could also negatively affect the income statements of companies, right? So you want to find great balance sheet companies in this environment. Third thing is, you got to buy companies that can handle any sort of economic situation, because we don't know what we're going into now at this point in time. Based upon these companies' earnings and based upon the Fed has no clue where we're going. They don't. They just don't. You've got to be ready for any type of economic situation. You got to be prepared for stagflation. You got to be prepared for recession. You got to be prepared for inflation to stay a problem, but unemployment low, so it's not really stagflation. It's just still dealing with inflation and high rates, right? You want to be in companies that can handle any sort of economic situation. There's plenty of them out there, right? Proven CEOs, you got to have good leadership in war times in regards to the stock market. Proven CEOs matter. Also, proven the ability to pivot, which is a very valuable skill. I like management teams that are able to pivot and say, you know what, this isn't quite working over here. We're going this route, right? You've seen that you've seen that with companies like Meta, for instance, right? And Zuckerberg pivoted and saying, hey, we need to go this route. We need to go that route. Not all CEOs can do that. There's proven CEOs that are good executors of their business model, but not all those same CEOs are proven that they can pivot on a dime and say, we need to go this direction. Let's go over here. Let's do this. We got to cut these employees. We got to do that. I mean, when I think about CEOs that are some of the best at pivoting their businesses, I mean, two that come to mind are Musk and Zuckerberg. And I understand they can both get hate at different points in time, but those guys, they know how to pivot. They know how to say, you know what, things aren't quite working out over here. We're going a different route. They're not afraid to make employee cuts. If they got to make employee cuts, they'll handle their business the way they got to handle their business. And the reason those guys really have it like that is because they've watched their businesses grow from 100 employees, right? From the ground floor. They've watched those companies grow from the ground floor, so they have a different view on it. And sometimes people say, you know what? I heard this criticism of Elon Musk. They said, he's not empathetic enough, right? He doesn't show enough empathy when he makes job cuts and those sorts of things. Well, he's got a different view. He started that company from the ground up. He started that company when they had no employees. So you just got to understand it's a very different view. Musk shows much more empathy, but then at the end of the day, you can show this, you can show that. You don't know what's manipulation, what's not manipulation, who's really got in their heart. I mean, at the end of the day, what do you want, somebody to cry on camera? Like, you can do that. It's just like, I don't know. You got to have the proven ability to pivot. You got to be more needs-based business models in this sort of environment, because once again, we got inflation that's still an issue. And if we do then get unemployment as an issue, right? Well, needs are even more important. We see people cutting back on more wants. I mean, even McDonald's. I mean, you would think they're kind of like needs-based. Even they've shown some weakness here recently in regards to their quarterly numbers. So, and you got to be careful where you're playing in needs-based. You might think, a CVS is needs-based, right? It's a pharmacy chain. Yes, but they also have other issues that are going on, right? A company like CVS, I would bet you, has a lot of debt, has a ton of interest expense. Higher for longer can put a lot of pressure on them, right? Also, CVS, those type of business models, they're not going to sell stuff for the cheapest. So people might be more inclined to go to Walmart to buy something that they would traditionally go to, we can call CVS for, right? And you also need to be ready to buy dips on any of these big moves, because we're going to go through a bout of volatility here. One day it's going to seem like everything's great and your portfolio is skyrocketing to the moon. The next week, all of a sudden, it's going to seem like it's the end of the world, stagflation, another 50% drawdown in the stock market, and there's going to be a lot of fear. And so you got to be ready to add on big dips in stocks you love, in the market in general, and those sorts of things. And you got to be patient with it. That's the other big thing. Patience pays big time when you're in this sort of market. Don't get impatient with it. What if we're in a downtrending market for the next year? Are you going to be able to handle that? I'm not saying we are. We could be in a skyrocketing stock market. We get the soft landing, inflation comes down. Next thing you know, we're in the twos, Fed's lowering. Unemployment never goes above like 4.5%. And company earnings start coming back stronger, looking better in the back half of the year. Boom. Next thing you know, rocket ship, right? Russell's rolling, all those sorts of things. You got to be prepared for that as well. But be prepared for a stagnant market. Be prepared mentally for a market that goes up substantially, and be prepared for a downtrending market over this next year. The Fed has no clue what they're doing. Do not count on them to bail you out. They do not know. That's the bottom line with that. And so you got to be mentally prepared for whatever over this next year. This is not a clear time. I think it's a very cloudy, murky time. over this next year on what really happens here. And so just be prepared for a range of outcomes. If you're not prepared for that mentally and you think only one outcome is the right one, your one outcome's probably the wrong one. I'll say that, okay? And so just very, very important to understand all those sorts of things I just ran you through right there, okay? Appreciate y'all joining me as always. Thanks so much for being here. Much more of a serious video here today. And once again, if you're looking to apply to join my private group, pin comment down there, fill out an application. We'll see if we can get you up to a much higher level than where you're at. Access to all my course curriculums, Discord chat. Time periods like we're going into now is definitely the time periods that community is good. It's good to be around like-minded investors, other people that are buying the dip, and other people that are, focused on the same things you're focused on, because it's not easy to find that sort of community out there of people supporting each other and excited to buy positions, build out portfolios, and those sorts of things. So pin comment down there. Much love and have a great day.